All right. My name is Chris Campbell. I'm a practicing CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk about conflicts of interest with your account. I've recently been presented with a number of situations that could present a potential conflict of interest issue. Some could potentially be, and some things that had to be pointed out. And when I bring it up, sometimes the clients aren't necessarily aware of it. In some instances, it may seem more obvious than others. In recent practice, I had to bring this issue up with clients, and in some instances, they just weren't really thinking about the potential conflicts of interest that could come up. There were instances where I would explain the potential conflict and how things could work against it because it wasn't so obvious some instances. I figured I'd go through examples of situations where a potential conflict of interest could exist with your accountant. And that way, if you do identify it and you find yourself in a situation, then you would know that you may need to seek counsel elsewhere. The first thing could be in a line of business. If you're in a partnership, let's say that all the partners, say if it's a closely held partnership, they're using the same account for both the business as well as personal taxes. And let's say that the partners decide to part ways and there is a dissolution process. And you and your partner are using the same accountant, that can create a potential conflict of interest. So you may have an idea of how you split things up, what things are valued at, what that partners can take away from the business. It creates a potential conflict of interest if you're both using the same person to work with you on said services. So if you find yourself in that position, you want to seek counsel elsewhere, or if you want to avoid it altogether, maybe necessary if you're in a partnership with folks, it may be a good idea to not have the same accountant, just in the event that you do break up, then you don't find yourself having a scramble or find someone, or you get into a contentious battle with your partners over who's using the accountant. You may want to avoid that scenario altogether and come into a partnership, make sure everyone has their own person. So that can create an issue. Another one, which I think is a little more obvious, is the same scenario on the personal side. So you have partnerships that may break apart in business. And then on the personal side, you have partnerships that break up with our marriages. If you're with your spouse and you've been using an individual for a period of time, and as a couple, you decide to call it quits through that process, or at least until it's official, it's usually not a good idea to use the same person. You do an evaluation of assets. You can get put at a disadvantage from tax filings where it may be more advantageous for one spouse or another, depending upon different scenarios. But there's a number of issues, but I think that seems to be pretty clear cut as far as presenting the conflict there. So another scenario which could present another conflict is that if you and your competitors are using the same account, and that really would apply for a few different scenarios. So say you and a competitor are competing to acquire the same business. That present a conflict. You're working with an accountant to value your ability to go ahead and purchase the business, and they're working with your competitor who's looking to do the same thing. That can create another conflict. I'd say maybe at least 80% of the situations would probably fall under those three things, but that would present a conflict. So those are things to be on the lookout for. I hope this was helpful. If you have any more questions about this particular topic or any other tax related questions, feel free to reach out. I'm happy to help. All right. That's all for now. I'll talk to you in the next one.